All right. Hey, everybody. Welcome. This is 30 Minutes of Awesome. I'm your host, Jeffrey Turnmeyer. Remember, if you are brand new here, make sure you give me a shout out in the chat. I love to welcome new people to the show every single week. This is beautiful downtown Knoxville, right there on the screen. That little ball right there, that's the one I keep talking about. It's like a gold-plated thingamajigger they built for 1982 World's Fair. The amphitheater right there behind it with the two little peaks sticking up. That's about all that's left of the World's Fair as far as buildings they built. They've kind of torn everything else down. And they built that thing in a giant ditch. Like the land is higher almost everywhere else in town. That's right down near the river. And yeah. So we're kind of looking down into the low spot there in town. We've got the First Horizon Bank building, and I guess it's now the Truist Bank building in the background. It used to be SunTrust, and before that it was like BB&T and who knows what else, and just fits with all the bank crisis we've got going on. So that reminds me, coming up after this, I have a special link. It's pinned to the top of the chat there. JeffreyTrader.com/banks. You come join me at 7 p.m. for a special banking crisis update. So on tap today, we got CPI, PPI. We got CPI came out this morning. PPI come out tomorrow morning before the market opens. We've got the Fed coming up next week. What are they going to do? Are they going to cut? Are they going to pop? Or half a point raise like JP said last week? Old buddy J Powell. Or is it down at a quarter point raise? Like there was like 80% odds this morning, but then the rhetoric keeps popping like no rate raise, just hold steady. But then what happens if they do a surprise cut? Like money was flowing out of banks at a record pace today. Small, regional, and local banks were getting hammered today all day long. They said the phone lines at the too big to fail banks was so, like, it was just packed. It was kind of like, and they were joking, it was like O'Hare Airport on a snow day. Like the planes just lined up, miles down the runway. They were saying it seemed like customers were lined up trying to open new accounts and get funds transferred to those too big to fail banks all day long, was the reports I was seeing. I don't know. That sounds like the Fed's got a problem. That's a systemic risk to the way of financial life, not just the United States. This is like trickle over all over the world, really. I mean, if all the money gets centralized into those few banks, like that can be a problem. It's not just a problem of liquidity. It's a problem, like you just can't concentrate all the money that way. Especially when the whole country's built on having distributed finances and stuff like that. So sure, you can say it makes sense from an over, like a centralized game plan, but I'm kind of the opinion there's not a centralized authority out there trying to coalesce all this stuff. It's just the side effect of capitalism. When you try to optimize the game for capitalism, it seems like there's an overarching force that's pulling all this stuff together, but really it's just everybody trying to simultaneously optimize capitalism. And the way you optimize it just seems like there's an overarching force out there, the hand of the invisible hand out there pulling it all together. So socialism is a little different, but capitalism is optimized by making the most money, and you make the most money financially by pulling things together. Now, what we got is an artificial hand out there trying to swat capitalism and setting rates and futzing with it in different ways. If we just left it going, leave it alone, it'll do its thing. Like the inflation would run up and then it'd run back down. If we had never pumped money in the economy, we would have never had inflation spike up like it did. So. Them bailing out banks, whether they want to call it a bailout or not, it's bailing out, and who's backing the money? It's the U.S. taxpayers. It is not the banks paying for it. I mean, you just got to call it what it is. It's a bailout, and they're bailing out some of the richest people. When 97% of your customers have more than the FDIC insurance, you're not bailing out the regular people. You're bailing out the rich people, and you're backing them. I mean, just look at it for what it is. And, I mean, just crazy stuff. So we're doing that, and we're going to pump liquidity into the market. Even if they don't cut rates, they're going to pump liquidity into the back door. They're going to bring it in by the $1 trillion truckload, and that just creates more inflation. So the only path forward is hyperinflation. Like it, love it, hate it, whatever. The path forward is going to be hyperinflation. It's not going to be today or tomorrow, next week, but the end game is hyperinflation. It is. It's the only way we can afford the debt that the U.S. has accumulated. I mean, we have $210 trillion worth of debt, or even more, I guess. That's just the conservative number. 31 is the official number. If you go look at the unfunded liabilities of the country, it's more like $212, $215 trillion, somewhere in that ballpark. I use 210 as a conservative number. How do we fund that? How do we afford that? Hyperinflation. That's the only way. And you could say, oh, we're going to cut all the spending. There's no way we're cutting the spending. People like money. People want more money. You want to make more money. You want to be able to afford more things, right? The only way is to increase the money supply to the point where $210 trillion is nothing. So, I mean, that's my 2 cents on the whole thing. Like I said, I'm doing a whole banking crisis event at 7, so you can come check that out. And we'll talk about your favorite stocks here when I get to the hyperinflation. So you've got $1 now. It'll be worth 10 cents. Whatever you can buy for $1 now will be 10 cents. I mean, 10 cents on the dollar. So it costs $10. What you got for $1 now will be $10. Your average car for an American, $40,000, probably going to be $400,000. The average car, the entry level sedan, $200,000 to $400,000. So. Yeah, the link's it's pinned to the top of the chat there. So just scroll up to the top of the chat, and it's right there at the top. I'll throw a link when I get down to the end of this too. So, all right. As always, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation, informational, educational, and fun, is not a recommendation to buy or sell any financial instrument or otherwise. If you desire that personal financial advice, hire and consult a financial advisor. Oh, one more thing about the event at 7. I'm giving away something special at the end of the event. So you don't even have to buy anything, don't have to do anything. You just have to come participate, and I'm giving away something for free at the end of the event, very end. So stay to the end. It'll be worth it. I promise. Something I've never given away before. All right. And let's pull over this chart. This is, I'm sure, the chart everybody's sick of, but look, we closed the day today. This is a 3-day chart, so these candles are 3 days. But we closed the day today back above the purple downtrend line. Remember, a spike does not make a new trend. I was waiting for some sort of continuation below here. We got a jump right back up, poking above the trend line. We break out above that 40-50 level. It's game on for a new high. All right, that level comes in right up here, 40-50. Probably go retest this 4,300 level right up here, and then we'll see. If we turn down from there, we can make a lower low again. If we can break out above that, looks like new high for the S&P 500. One interesting thing I wanted to point out. Usually when we see bearish action or the market being kind of particularly bad, who can tell me which candles are the bigger candles on this chart? I mean, I see a lot bigger green candles. And this, each one of these little segments is a day. So this is a day, this is a day, this is a day. Last 3 days, the bigger candles seem to be running these big rips to the upside on NQ. Now, usually when we're in a bearish market, we see bigger downside. The rips to the downside of the bigger moves. These are showing rips to the upside. That's making me very cautious that we're going to see a rip higher. So just keep that in mind. The underpinnings here are showing we're getting some strong buying coming in, then it shuts off for a little while, then we get some strong buying coming in, then it shuts off for a little while, then we get some strong buying coming in, shuts off for a little while, then we see strong buys, and that was right up into the close. So just be careful if you're trying to bet on shorting. I mean, I assume that since you're here, you've been hearing me mention that the market can rip higher, and you at least somewhat believe me, otherwise you wouldn't be here. So hopefully I'm right, but it sure does seem like the whole world is expecting the market to crash and take a duty all over the, go down to a lower low. And we held support there, bounced up today on ES. That's the S&P 500 futures. Looking like we can keep going. We break out above this high right back here. Again, that 40.50, 40.80 on, looks like 40.80 on ES. It's going to set it on a path to higher moves. Now, NQ basically held the roadmap line and this support zone that it had been working on since November. Held it here, held it here, held it here, zipped right through it here, and then stopped at the top. Just chopped in it for a while. Holding here was super bullish. This one breaking out above, say, 12,500, sets us on the path to get the next extension higher. Russell making a nice attempt at a reversal today, just kind of matching candles. It looks like it's somewhat of an inside day candle, even though it tried to push higher. That whole candle is smaller than yesterday's range. That's an indecision point, so we'll have to see on small caps. Now, a lot of banks were contained in Russell, and that an outperformance to the downside on Russell made a lower low. So we'll have to see what happens here. Keeping a close eye on this one. Russell was leading us, but now it looks like tech seems to be set up to lead for the next leg. Dollar, of course, continuing to try to push lower. I need to flip over to my red list as we work on down through here. So oil, reaching on down. Target's down here in the mid-60s. Looking like it's going to go. Finished up that watermelon seed squeeze, popped to the downside. This one can quickly reach right on down here. A move like that today went from about 74 down to 71, $3. So another $3 takes us down to about 68, another $3 right to the target. So another 2 days or so, we could be down there. All right. Yeah, the market can go higher with a weak financial. Like, don't underestimate sector rotation. Like, we can just rotate out of financials and go somewhere else. People pulling money out of banks, where are they putting it? I mean, you pull your money out of the bank, where do you put it? You put it in the stock market? Do you put it in crypto? Where do you put it? You just hold it in cash in a suitcase? I mean, that's under the mattress? Yeah. I mean, where do you put it? So that's the big question. Like, okay, financials are weak. Maybe banks are failing, but where do you put your money? That's the big question. So, moving on through the list here. Brent oil just kind of consolidating, not following the path of CL. This is European oil, basically. RB, this is gasoline. Tried to break out, coming back. If it holds support here, it can go higher, even in the face of oil going down. That's totally counterintuitive. But oil and gasoline don't necessarily fly the same pattern. So this has been on a rather bullish setup for a while, and we can get another pop higher. So watch out on gasoline. It does not have to follow the path of oil. They try to, President Biden and his crew try to affect the price of gasoline by doing SPR releases of oil, but that's not necessarily where gasoline prices come from. So, and gasoline's kind of a derivative of oil, and you can't really watch. In this case, it's a derivative that operates on its own. It has its own supply demand, own production. Even though oil is sitting out there, it's somewhat related, but it's not the same. So just keep that in mind. If you're trying to bet bearish on gasoline. NG, natural gas, forming a little pullback. I would have liked to see it go just a touch deeper, but that was the move that I was looking for. It held the 50% retrace. It can get the next extension higher. That would be somewhere right up about, looking for a 350 to up to maybe $4 is my next expectation if it holds right here. If it pushes a little lower, we'll have to reset that expectation. Somewhere in the $350 to $4 for the next push on natural gas. And it could push on out to about 420. If it does that, that's more bullish, and then expect a pullback back into this 350 area before the next push. But as long as it's below the roadmap line, that's a little on the bearish side for natural gas. Gold, nice pop. The play for that one is GLD, and we've got resistance at 178 to clear on GLD. Looking for a target at 185 and 190 for the extension goal up there. HG, copper, reached down and touched the roadmap line just barely yesterday. This can hold here. A breakout above 416, whatever the pound or whatever the denomination is. I can't remember all the futures contracts. They're all different sizes. If at 416 breaks to the upside, that high right there, we can see the next extension, and looks like somewhere around 480. Right up here, 460 to 480 would be the likely target for that next move. Now, how do you take advantage of that one? Probably best taking advantage of something like Freeport-McMoRan. But it looks like it might want to reach just a little lower. So those that were doubting my downside target on Freeport, looks like it might stretch just a little lower down to this 34 area before it can find a bottom. So, all right. Corn and wheat continue to drift lower, while cattle continues an unrelentless climb. Craziness. And pork has pulled back, made a jump right there, but still sitting below the roadmap line, can drift off lower. Soy, my wife's least favorite commodity, just sitting on the roadmap line, not really doing anything bullish or bearish. Looks like more sideways. And then everybody's favorite sweetener, sugar, looks like it's just kind of chopping. Probably going to come back and hit the roadmap line. It looks like a 1, 2, and probably do a 3 right down there. All right, so that favorite time, everybody. Taking some requests. I see we've got MRK, which looks like it's going to reach down to the roadmap line or possibly get bullish. Like, it's got two conflicting patterns here. It can either reach down to the roadmap line for a third wave down, make a lower low, or it can hold right here and pop, which would put it right up around this 120 area as a measured bounce setup type situation. So it's got kind of a little bit of a conflicting pattern there. Which one? It's kind of a coin toss. You got to be prepared for both. That's why usually when I say, if you're long off the market roadmap pattern, you got to have your stop down here below the roadmap line, because it can come down here and test it again. Like, this was a little bit short, so it was kind of a miss. It might reach down there and hit that 99.34. So if you wanted your stop below that, say 97-ish. But it also has that measured bounce holding that 786 right there. Can just reach right up into that 120 area. 115 would probably be the most likely, but 120 if it's going to be bullish extension. All right, Beto was rocking today until the buying dried up on Bitcoin. Then it got a little bit of pullback. That one has an extension set up to go higher. I mean, it's got all kinds of lines on this chart. Let's remove a few of them. We did this move right here. And that sets it up to go right up into this zone right here. This was that measured bounce setup I was just mentioning on MRK right there. Same setup, puts us minimum target right up here around 19. More bullishly ideal up here around 22. And that's what I got on that one. Mara, as mentioned this morning, somewhere around 14 is the target. Has that same measured bounce type setup. That's kind of, a lot of cryptos are like that. Ethereum being the exception. It has something a little different going on. LAC looks like it's breaking back down to the low side. My target is right down here at this level. And maybe we need to pull this up here. Something like that. That net effect somewhere down around 16 to 14, 14 to 16 area on LAC. would complete that pattern. You might say lithium's bullish though, all the demand. Well, Lithium Americas, the chart pattern looking like it's going to go lower low here. All right. Amazon still stuck consolidating. If it can pop out of the top of here, set your alert at 100. Should be on a rally up to this 140 at least. Retest this high right here. Otherwise, we're just kind of stuck for now. We got up, met that resistance, filled that gap, and came right back down. That is very close to a measured bounce setup right there. Yep. Pushed just a little deeper on yesterday. And the day before, it looks like Friday and yesterday. Pushing the limits just a little bit. Popping back up out of here. Back above, like I said, about 100. Sets us up for a push higher. And we should, at the minimum, make a higher high than we saw right back here at 112, 113, whatever that was. And really my target's right up here around 145-ish. That prior high from back here in August. All right, moving on. Let's see. Hey, everybody. If you're new, welcome, welcome. All right. I'll throw the link for the event later. PFE, that's the next one I see on the list. Oh, look at that. Almost to the target. Got just a little more to go. Looking for it to get down to that 37.80 area right down there. Almost there. It's chugging along. All right. Sorry if that's not what you were looking for, but that's what the pattern says. XPI looks like a big sideways to me. I don't expect that thing to do anything but that. I'm not sure why my arrows are so dark right now. Yeah, put in 20. There we go. I'm looking for more of that on XPI and XOM. Oop. Touch something extra there. Oh, look at that. Right to the roadmap line. Beautiful. Holds right here. It can be bullish even in the face of lower oil. That was a 1, 2, 3. Holding up right there. Remove that. Yeah, target be up here at 123, but we need a move up through. It's not a trade until you're above 115. Looking for 123. I mean, you could gamble and buy it on the next pop up above 110. It's a little bit of a gamble. And stop would have to be down here around 100. So, all right. Moving on. And boo soy. And JPM. Let's see. JPM. Yeah, nice bounce off the roadmap line there. It can retrace this deep, so be careful. It can go down this 120 area. But it doesn't have to. It certainly doesn't have to. It can hold that roadmap line just like it did right there and make the next extension higher. That next extension higher would look something like, well, that's cool. Didn't draw the next extension higher. Pull my, there we go. Somewhere around 148. It's gonna have to get up through this junk right there where it kind of did that little gappy thing to go higher. All right, GLD did that one already. Same chart, I mean, same deal. Resistance at 178. Look at that green candle yesterday hit right at the top of the resistance. Pulling back today just a hair. That was basically on the dollar, not really going anywhere today. We need continuation lower on the dollar, and GLD probably go ripping 185, 190 on the targets. Choo choo choo. All right, DVN, Delta Victor November. Oh, right down to the target, man. Look at that. That was a beautiful move right there. You know what? You know what that was? Look, little fib trick right here. Actually, I don't even have to use the fib. Look, you want to see where that target came from? Draw this move right here. Grab that line. Pull it right over here. Right there. Hit the target. Looks like post pushing 2 cents, just a smidge lower. Now it can extend. And that's what we use the fib tool for. What kind of extension would it be if it was an extension? Use my little fib tool here. And the extension would be down here around 39. Right there, if it's going to extend. If it's going to bounce, this would be a good spot to hold. If it starts extending, this would be a good spot to hold. So there's DVN. All right. Yeah, anybody that's coming out of Knoxville, you just you hit me up on, you leave a YouTube comment or let me know in Discord if you're in Discord. And yeah, we like to go meet up with people. Done that several times. And Goose, it's on here usually. Met him several times. Chris, I've met her a few times. I've met a few other people. So we sometimes bring my kids, sometimes just bring the wife. Sometimes just me. Just depends on what the situation is. Yeah, XOM. Yeah, 1, 2, 3 right in the roadmap line. That one can bounce. Like I said, I think I already brought that one up. 123 on the upside. So looking like get above that right there. Yeah, 115. Looking for that higher move right there. All right. SCHW. Whew. Yeah, that was a nice retrace right there. Have to do a few things here because that didn't. It bounced right off of that. 1, 2. Yikes. Let's see. How far did we extend? Oh, almost to the 1618. Let's see if this was part of the bigger correction here. Oh, it was. So it can hold here. This doesn't have to go any lower. Schwab, that touched beautifully, actually. Beautiful move. Overlapped. Check this. Oh, yeah. Very nice, very nice. So the next move. A little bit of advanced stuff here because of the size of the move. If it's bearish, you know, just if this whole thing is just a nasty corrective move, looking for a move up to 114. You might, whoa, that sounds crazy. Well, this is probably going to take a while too. The last move took from March 20 to February 22, so almost 2 years. So this move probably take 2 to 3 years, maybe even longer. Somewhere like that. All right. Sorry if you hear that muffler. Somebody needs to put a muffler on their car. All right. I got down to the bottom of the request. That was it. Come on, surely y'all got more requests than that. I know every week somebody wants to see Apple. AAPL. Zoom this back up. So still the same parameters here. If we break out over 155-ish, you know, back up through these highs right here, all set for 199. I'm still on that. You know, we held amazingly well on Apple. So Visa, yeah, look at that, touched right down there, bouncing. The upside target is right up here around 240. Look for that one to hold. I would be cautious until we break out back above 227. I know that's like a long time to wait. I mean, you can be aggressive and try to get on it. Just make sure you have your stop down here around 210 or so. All right, there's I did Amazon. Where were you? Hit the rewind. ORCL. Oracle right there. Nice 3-wave retrace. What do you mean 3-wave retrace? Well, we got this move right here. This move right up here. And then this move right down here. Right like that. That's 3 moves. Those are swing moves. All right. It's been pointed out to me that sometimes not everybody sees what I'm talking about. So right there it is. It's down to the 1618, almost exactly. Beautiful move. beautiful. Very proportional. So if you run the fib from here to here. Now why would I do it that way instead of the other way I did it a minute ago? Because this move looks like a continuation move. This was a pullback and the continuation would be out to 93 right here. Whereas the move on Schwab was a part of a bigger move that looked like it was, I had to go bigger for the pattern. So this one right here, this move is much bigger in proportion than this one right here. This is just a little pullback and we'll get some continuation probably out to 93 up there on Oracle. So target right up here. All right. VLO. Right to the roadmap line, holding, like all these oil things can hold right in here, right in this roadmap zone, and then get a bounce. It's going to be really pretty when oil finally bottoms. So, all right. Amazon. Right there it is. Breakout through 100. Resistance up here around 115-ish, where 112, 115, where we stopped before. We get above that. Continuation of 145-ish, and ideally up to possibly 160 on the extension before we get another bigger retrace. So that's what I'm looking for. Right now it's just sideways in this consolidation zone. Tried to break out lower, couldn't do it. Right back into the sideways. Got to break up to 100 to get that continuation higher. That's Amazon for you. All right. Did Mora already at the beginning. Shop. And holding, this is a measured bounce setup. The target would be right up here. Let me make sure that that's right. Yep. Target's right around 59 right there. But it's got to break back above. I've got all these alerts set up here. I don't know if you can see all these lines. I've got alerts like crazy because I'm going to go long on this one when it breaks back up through 46. Even though resistance is right up here at 48.50. I've got an alert there too when it breaks above that. I want to know. I'm probably going to get long when I move up through 45. Probably going to stay long when I move up through 48. And I don't want it to turn down right there. If it turns down there, I want to get back out. So cautious. But looking for a move up to this 58-ish area right up here. And the circle does go on higher, but I like to be conservative with my targets. So I'm going to be looking for my exit when we get up to that 58.50 area right there on shop. So that's one I've got my eye on close. I mean, that one's a very, very nice setup right there. It's a nested, measured bounce type setup. All right. XLF. Wow. That's a massive pullback. I got nothing there. I mean, that's pretty gnarly. Didn't hold any support. In fact, it may come down and retest the bottom here. That's a three-wave up, and that's a kind of expected continuation down. It could hold there. I mean, it could. That's a 786. It could. That's just not a bullish looking pattern right there. That looks like a big 1, 2, 3, but the truncated, the 3 is not the right size. It's just it's a gnarly, nasty pattern. That's what I gotta say about that one. Some of them just don't look very good. Yeah, Bitcoin had a nice pop today, but getting a little bit of a gnarly retrace here. Sellers dried up. The story's really on the 15-minute chart. Look right here. We had buyers for 45 minutes constantly, and then they shut it off, and it just drifted back to the roadmap line on the 15-minute chart. The next push needs to break out above that and stay above that. On the bigger picture of the daily chart, it has a pattern to go hit up here around 29 at the minimum, and potentially up here around 34 if it's really bullish in the short term. Then we'll probably see another pullback into this area around 25, 26 before the next leg higher. Not too concerned about that tail yet. We'll have to see what happens here in the next day or so. It was a nice push higher. I was hoping to get into the 27,000s on this push before we got the retrace. But so far on that small time frame, doesn't look like anything damaging. just somebody bought heavily for about 45 minutes and then shut it off. And we drifted right back to the zone where we were before that buying. You see how we were parked there. Somebody bought heavily for about 45 minutes and then right back to the resting. All right, moving on. LEN, Lennar. And nice little, that what kind of news pop was that? Yeah, it's a little bit of housing uncertainty, whatever. Just looking at the daily chart. Yeah, it's got resistance up here at 108. And it may, oh, I don't have enough. I just messed up the fib line here. Put that right there, put this right here. Caution, it may turn down right around here. Oh, look, that's funny. Shane, if you're on here, I keep telling you, man, these things will retrace and find resistance before they move on down and come back to that same area and then turn down again. It's kind of funny. So this one may turn down again and make a third leg. Same kind of deal I was talking about earlier. One, that retrace, and then the three. Grab the wrong thing again. Could be down here. Could make a move down to this 85 area. So just be careful. And if it pulls on up right here, it just raises the 87 right there on that pullback. All right. Baba. It was just BABA. One more. Well, didn't hold the roadmap line, that's for sure. Didn't hold support. Made a 618. If it holds here, that can be bullish. What kind of target would it be? Would it be? The first indication would be a move up through that big red candle where it popped up and dropped. So in a bearish instance, 45. On a more bullish instance, up here around 170, 180. But it's got to get up through that 100 area. Sounds a lot like Amazon. It's like almost the exact same numbers as Amazon. It's kind of goofy. So that's what we're looking for right there on BABA. I'm not big on China. I'm probably not going to invest in any BABA. So NOC. Let's see. Yeah, that was sideways for a good long time. They had some. What was it? The news out today was marginal. Yeah. The mixed shelf offering, that's not bullish. That was yesterday. The mixed shelf offering is not bullish. So be careful. That's dilution and raising of capital. So at some point, a lot of these government contractors are going to come around because weapons are going to need to be procured, and it's going to be on the taxpayer's dollar, and it's going to be, you know, more money flowing into the system as we replace all those weapons that we gave to Ukraine, the 19 godzillion trillions of dollars worth of weapons. So NOC, LMT, to some extent BA, RTX, all of those have some weapons that have been given away that we've got to replace. So those will all turn bullish eventually, but like NOC, not yet. Looks like it's gonna go retrace a little bit further. Might make another leg down here, back to about 400. Looks like. All right, be careful on that one. Like I said, I'm gonna have to jet off of here for too long here. I have an event coming up at 7 o'clock. Right here. Oh, I didn't copy. Come on, copy. Come on, copy. Copy. There we go. JeffryTrader.com/banks. Got a little thing for you. Let's see. Right here. So the SVB, Silicon Valley Bank crisis, has many people worried about the next financial crisis. It could begin as soon as tomorrow's Fed announcement. Well, I mean, that's the PPI, really. It's coming out tomorrow. And I believe there's no brainer investment the traders are already flocking to as a safe haven from the looming chaos. I'll explain it all live tonight at 7. If you want to join me, links in the chat there, or you can hit up jeffreytrader.com/banks. Come join me at 7. We'll have it open and going. Yeah, if you want to replay, hit me up either in Discord or whatever. Send me a message. I'll get you a replay as soon as I can. So I'll record it. It won't be live streamed. It'll be on. This is a link to Zoom. It's a private meeting. So, all right. And like I said, I'm giving away something cool at the end. It'll be the last little bit there, giving away something extra cool, only for live attendees. So you gotta come. You gotta talk. You gotta participate in the chat. And if you're like one of the top participators, I'm giving away something I've never given away before. I'm not going to tell you what it is until the presentation. So you got to show up and find out. So, all right. Come join me. I'll see you guys later. So have a great day. Be careful out there. Remember, PPI, 8:30 in the morning. And then FOMC next week. We'll have another one of these 30 minutes of awesome before the FOMC on next Wednesday. So be careful. See you out there. Bye for now. Links in the chat if you want to come join me at 7 o'clock. That's 7 p.m. That's like an hour and a half or hour and 20 minutes from now. So see you later. Bye for now, everybody.